Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, the stock market finally made it above 11,000. So what's next as far as moves are concerned for the market? That is what our regulars here at the Roundtable are going to weigh in on today. Editor-at-Large Steve Reitmeister, Research Director Shiraz Mian, and Market Technician Kevin Matris. And Steve, I'll start with you because that was the reasonable question until the Goldman news broke. And then many people think that the Goldman news throws some kind of a monkey wrench into the direction of the overall stock market here. Does it jeopardize anything as far as market's direction near term?
I mean, for me, I think it's more coincidental that the market running out of steam after nearly a 12-13% run from the lows that it made in January. So I think it's just coincidental news what's going on with Goldman, because I don't see how it really would have any effect on corporate earnings as a whole and what people should be willing to pay for stocks. So I think it's just the market saying, hey, we've made a heck of a move. Corporate earnings are good. You know, we've bought up to that level, and maybe it's time to settle into a range for a while.
So, Shiraz, if that's true, then was the market ready for a correction anyway?
In my sense, yeah. In fact, over the past week, I had been constantly saying that the earnings expectations, they were fully priced in the market. The gains were strong. The economy is doing good. But the guidance, the outlook, the talk from management teams needed to be even better than these very impressive growth expectations that were built into the market. So yeah, it's the Goldman story and any other variable that adds to some element of uncertainty would be pushing the market down, and I'm not surprised with that at all.
All right, so having heard the fundamental side, Kevin, anything on the technicals that you're concerned about right now?
You know, I would not be surprised to see the market flit back and forth between 11,000. But I think the real question is, do we see a wholesale sell-off? And I don't think we will. You know, if you take a look at the economy, economic recovery, it's still within its infancy. And even though the market has made a huge move from the bottom, I think just like the economic recovery has a lot more to go on the upside, I think the stock market has a lot more to go on the upside as well. But even if we do see the market pull back by 3 or 5%, or remain in a range-bound way, I think the environment is still strong enough for the good stocks to be able to advance in the stock market. And I still think that there is a lot of upside potential.
So does the Goldman news provide any kind of a buying opportunity, or is it still too soon to find out?
You know, the real question is there going to be a bigger witch hunt? Probably the wrong word, but will the feds go after these types of practices with other companies? Personally, I would probably stay away from the large financial companies. But if you look at the tech sector, if you look at the retail sector and all of these things, what do they really have to do with this problem with Goldman? And I think if you try to find those good stocks in those unrelated sectors, I think you can still be rewarded.
All right, so earnings, Shiraz, going to start heating up here now. The first quarter reporting season going to start heating up here. Are earnings being still good news enough to move the market forward here?
To the extent that the reports, the guidance, and also the top line, they come in line or ahead of the expectations that are built into. In fact, I'll correct myself, not in line, significantly better than the expectations. I think the market would be looking for an opportunity to sell off, and if managements in their outlooks come with whatever the market was expecting, they will not be happy with that. So it'll be good news as long as what we saw in the first week when we had good numbers from JP Morgan, when we had good numbers from Intel, but even strong numbers from Google were not enough when they were not really ready to come out and wave and say, you know, we see visibility, we see strong earnings and strong outlook later this year and into next year. So the key from the earnings perspective would be better than expected and strong guidance and outlook from management.
You agree with that, Steve?
Well, the thing is, we kind of are getting that, but here again, we got to remember that the stock market is always looking ahead. So this whole move that we had up to, let's call 11,200 on the Dow, was an anticipation of a strong earnings season. And we are getting a strong earnings season, and now it's like, okay, great, and maybe now take a break for a while, and then we see what's going on forward. So again, from the first round of questions, we were just kind of talking different time frames, okay? So I'm still in the camp that yes, the economic recovery rolls on, corporate earnings go higher, and in time, the stock market will roll on. But in the near term, okay, the next couple weeks or a month or so, I think that the market has made its major move. It will go through a consolidation period, and I think probably play in a range between 11,200 and 10,600, which is where the 50-day average is. Kind of play in that range for a while, you know, kick out some of the excess and some of the oversold stocks, rotate to some of the value plays, and then if it looks like the economy is rolling on, then we're ready for our next leg higher.
Shaz, do you have a range in mind for the market?
I would, in general, in broad terms, would agree with Steve's assessment. I'm looking for something 10,500 on the Dow as well, in a similar type of equivalent move on the S&P 500. So generally, if you translate that into percentage terms, I would say last week's top, we pulled back 5 to 7%. Before we start consolidating and head back up again.
All right, and saying last week, we're recording this on April the 19th, just so everybody has a time reference in mind. Kevin, trading range?
You know, if we pulled back, I would look at this as a great opportunity. You know, when I see the market down in the morning, you know, I always think to myself, I can't wait to see how low it's going to be at the end of the day, because there's a ton of stocks out there that I can't wait to get my hands on at a lower price. So if we do see a pullback, instead of running for the hills and getting all panicky, I'm going to be licking my chops looking for those stocks that I couldn't buy at these new lower prices. And I still think there's a lot of people out there who are looking for some kind of shallow pullback so they can finally get in on these winners. And that's why I think that there's still a lot more upside to go.
So percentage-wise, pullback would mean what to you?
If we see a 3 or 5% pullback, I would consider that to be a non-event, and I would look to be a buyer.
All right. That's the latest thinking from the roundtable with our cast of regular participants. We'll be keeping an eye on this and other issues as they arise, and we will bring them to you either here at the roundtable and our assessment of them, or in other commentary on our homepage at Zacks.com. So keep an eye there as well. With everyone here, I'm Terry Ruffalo.